Good morning, Minnesota and beyond. My name is Michael Walgrave, and you are watching Moving Minnesota live stream. We are in week 3. This is episode 14. We're doing a pilot run on this show here to see if we can bring some knowledge to the Twin Cities metro area in real estate and all things great in the 7-county metro area of the Twin Cities of Minnesota. You can reach me with questions at 612-930-2929 or get a hold of me at michael@walgrave.com. Today we have a great show ahead of us. We have one of the biggest personalities in the Twin Cities. It's Mike Ouverson. He's with Luminate. He's our preferred lender. He's Mortgage Mike, as he's known in some parts, Magic Mike in other parts, and Magic Mortgage Mike in all parts. And he is going to be on the show to give us a little bit of enlightenment on who he is, what Luminate does, where everything's at with mortgage rates these days, maybe even know how to read a candlestick chart, and we'll get you going on figuring out how to get going into real estate. And one of the most important and first pieces you do should be to reach out to a lender or 3. We highly recommend Luminate.com, or I'm sorry, that's not the web, GoLuminate.com, because they're a preferred lender. They've been working with the Walgrave Real Estate Group for a good 20 years now. They make everything seamless, easy, and fun a lot of the times. Even Mr. Ouverson is a big personality, and I love it. A little bit about me. I'm Mike Walgrave. I work for the Walgrave Real Estate Group, or I'm a part of it anyways, and we are part of the RE/MAX Advantage Plus here in Minnesota, one of the biggest brokers in the nation, actually. And you can get a hold of me again through michael@walgrave.com. I bring to the table, I'm a military veteran. I was in the Army for 3 years. I have a master's degree in sustainable management, bachelor's degree in agribusiness. And so I know a few things outside of the real estate realm, which actually pertain to the real estate realm. If you have questions on that kind of stuff, feel free to get a hold of me there as well. Let's see here. Let's recap the past 3 weeks. We've been going over a different county a week. This week we're in Anoka County, checking out the scene, what's all good to do up there, where's a good place to live, what they have to offer in that neck of the woods. It's part of the north part of the Twin Cities metro. Also this past week, yesterday, in fact, we hosted a little hanging out deal at the Wilds down in Prior Lake. It's in Scott County that we covered yesterday. Fairly close to Mystic Lake Casino. Great area. Got a couple of videos here trying to promote out my other members of the Walgrave Real Estate Group. Do you have one of those videos for us there, Garrett Beans?
Yes, sir.
Play that beautiful footage.
Here we go.
Beautiful golf course. Real nice facility. Got the pro shop, golf cart rentals, of course, catering inside.
We're at the Wild Golf Club today.
Whoa, it's warm out, 90 degrees, July 31st, 2024. You're hanging out with Mike Walgrave and Riley Bester.
Yo.
If you need any help with your real estate needs, such as buying, selling, investing, either one of us can help you. Reach out to walgrave.com. Bester, what do you got for details?
Yep, like Mike said, if you need any help with buying, selling, investing, building, we got you covered here. My number is 952-491-3375, and you can find me at riley@walgrave.com.
And make it a great day.
And then we
got one for Josh Nath, too.
Here we go.
It was warm yesterday. Real nice today, though. 10 degrees cooler.
There we go.
I like making people social media for their accounts. It's kind of fun. Basically, same images, different tunes.
Hello, folks at home. This is the Walgrave Real Estate Group. We're hanging out at the Wild. I'm Mike Walgrave. This is
Josh Knapp.
and we are just enjoying this wonderful golf tournament here on a beautiful Wednesday, July 31st day. If you'd like to talk real estate, stop on down, or you can reach Josh at
612-271-2332.
All right. Good to talk to you all. Make it a great day.
Both those guys are awesome to work with. I enjoy the company they keep in the office for sure. So get a hold of those guys. You got Josh at walgrave.com or Riley at walgrave.com. Both are they're located in the southern part of the Twin Cities, around Lakeville, Prior Lake, I believe Buster said he was from last week. And but they service the whole metro area as well. So don't be afraid to reach out to them. Good dudes. They know what they're talking about. Plus, they got the power of the Walgrave Real Estate Group behind them. So make use of that. So, well, without further ado, let's bring on, I know some people get mad about this if they get called Rockstar. Like there's people in the Walgrave Real Estate Group. They don't want to be known as a Rockstar Real Estate, but I really truly feel Mike Ouverson is the epitome of business rock star, just in his spirit, his jokes, his conversation. Bring this man on here, Mike Ouverson from GoLuminate.com. What's going on, Mike?
Hey, Mike, how you doing this morning?
Good.
I should have worn my my wig that I wore for the July 4th party for that intro.
Yeah, I should have sent the producer a picture, but
Yeah, that was a good time. That was definitely a good time.
The backyard bash. How long have you been doing that for?
That backyard bash, that was year number 13 now. 13 years in a row.
Wow. Beautiful house, beautiful property. What lake are you on?
Crystal Lake in Burnsville, Minnesota.
Yeah, I see pulling monsters of pike out of there every now and then. So
we got big pike and we got tiger muskies too. So so most of those are tiger muskies that we pull out of there. So super cool. I love the lake. It's small enough to where it doesn't get so busy with traffic and stuff like that. So being a metro lake, that's one of the negatives, right? It can get busy at times. Our lake doesn't get that busy because it's a smaller lake. There's no restaurants on it. So it's great because we have, we got 4 kids, they're out swimming, they're on the jet ski, stuff like that. It's pretty safe for the most part, for get out there and have them enjoy the lake.
Not a lot of traffic. Perfect. So yeah, very good time. And that was your debut of your band for the first time, the Dusty Rubbers, was it?
Yep, Dusty Rubber was our name of our band. That's the first time we played in front of a crowd like that. We had about 250 people show up at that party there, the Independence Day party weekend. So
you had a couple of food trucks. Jeez. Fireworks.
Yeah, mini donut truck. Had the fireworks, had the live band. Had a giant water slide in the front. So did you go down that thing, by the way?
No.
You didn't on that?
I just parked a chair and just sat and watched the action. I enjoyed the vibe. So
yeah, nice. Love it. Yeah. So it was a good time, good turnout. We love doing that every year, so we'll be back next year doing that as well.
Rock and roll. I will be there. I appreciate the invite this year, and hopefully I brought some vibe to the thing in my own right, I guess. But
yeah.
I made the mistake of getting behind the bar that you had there and just started pouring people shots. I'd like to apologize for that. I brought some festivity. I hope so.
That's perfect. Well, we didn't have a bartender, so you filled a role that we were missing. So I actually appreciate that.
I just saw a role that was open and stepped into it. So
that's right. Love it.
So do you have I got that email this week of the candlestick chart of the rates going on. I think Beaner, do you have that you can bring that up there? I was hoping that maybe you could shed some light on what's going on in the mortgage world these days for interest rates and where we're all at here.
I certainly can. If you can pull that up, I'll explain a little bit when we pull it up. But so, and we'll try not to make it too boring, right? I don't want to sit here and bore people with the nerdery that I go through every single day and that I watch every day, right? But it's kind of cool to look at these charts and just like most people look at this chart and be like, I have no idea what am I looking at? I have no idea what's going on. But it's a nice visual. It's a nice visual to go with what I'm going to talk about here as far as interest rates go. So if we look at interest rates from January 1st until today, right? So year to date, the interest rate that we have today is almost as low as it's been since the first of the year. So the right at the first of the year, so January 1st, 2nd, 3rd, we had rates that were only 1/8% lower than where they're at today. The rest of the time, so if we look at the 7 months that we're into the year already, the rest of the time interest rates were higher than they were today. So I was pointing out yesterday, it's like if you look at this chart, you can see the trough, right? On the chart, the lower the candlestick, the higher the interest rate, because as the market gets worse, rates get worse. And as the market gets better, rates get better. So when the chart gets pulled up, you're going to see here, there's a trough, right? At January, it's here, then it kind of goes down, and then now it's on its way back up to where we're at now. And so the good news is there it is right there. You can see like the crazy ups and downs that we've seen in interest rates, right? There's no consistency at all on that chart anywhere. It's up, it's down. It looks like an EKG is what I tell people, right?
Yeah.
So, so the good news is that have we kind of brushed and touched interest rates where they're at now a few times since the first of the year? We have, but it hasn't held, right? So you can see on those peaks, it's like as soon as the market goes up and it's doing good, boom, we go back down, right? And then it comes back up and it's like, okay, great, rates are lower now. And then boom, we're back down. I actually think that we have some grip here where I think this level is going to hold. And so that's the exciting thing about the news that I sent out yesterday was everyone's like, yeah, but we've seen this happen a few times already this year where we hit this level and just goes the other way. I actually think it's going to stick. And I think rates are actually going to start going lower now this time.
Any idea why it's been flowing up and down like that? I mean, it seems like I don't know. It's probably the $1 million question right there, but
yeah. So there's thousands of factors that go into this. It's all economic data, right? The main driver though is inflation, right? What's the commentary? What's the narrative? What are you seeing online with inflation? If the inflation news was good of like, hey, it's heading in the right direction. It's at a level that we would like it to be at. It's tracking down the right path. Then our rates get better, right? And so that's when you see those runs of the markets going up because that's the type of commentary. Then all of a sudden some sort of economic report will come out to say, yeah, inflation is back. And it looks like, consumer goods are going to go up in price again. And you start hearing those things in the news. Well, guess what? That causes the market to get worse. And now rates are going to get worse. Now the news around inflation is that the Feds had a meeting yesterday, so July 31st, and they are predicting that they're going to lower the Fed's funds rate. It's not mortgage rates. It's a different rate out there. But anyway, they're all kind of tied together.
Sure.
They're going to lower the Fed's funds rate in September. That's their plan. They're pretty much, we're on track for it. It should happen as long as we stay on this track, and it's going to happen, right? So that was the news yesterday. And so that's why we see a nice green candlestick there yesterday on the far right. And today we're up again. We have another candlestick like that on top of that today. So again, the market is getting better. Rates are getting better today because of that news.
Awesome. Interesting enough, I know you guys keep saying that don't mind the rates so much. They're at basically the historical level of average at 6.5%, 7% over 40, 50 years kind of thing. I think my parents bought at like 10% interest rate back in the 80s or 90s, something crazy like that. But the advice that I've been hearing out there, I've watched you on other shows, Ryan O'Neill's show with the Minnesota real estate team and Jason's show with US Home Talk, that you were saying that kind of get a feel for the rates, but don't fall in love with them because you kind of want to get ahead of the crowd before it dips down into the 5.5%, because now you're faced with a lot more people entering to buy a house because they've been trying to track the rates and sitting on the sidelines. And really all that's going to do is just drive up the prices, supply and demand wise. So really, yeah, you might be saving on your interest rate, but if you can't buy the house because all the prices got inflated because everybody's jumping in the pool to buy a house. So,
right.
And so it seems like, you get in now before it drops in September, and then you refinance later. And how does the refinancing work exactly? Do you have to be married to a rate for a certain amount of time, or it's flexible?
It's flexible. So we say marry the house and date the rate, right?
Okay.
So when you buy a house, there's two costs to buying a house. There's the cost of the house itself, right? And then there's the financing that you need to get in order to get that house. When you buy a house, you can't go back and change the price of that house. Okay. I'm going to buy a house today, and then the closing is on August 1st, and I'm paying $400,000 for that house, right? And now you're into that house 6 months down the road. If the market goes down and that house is now worth 380, can you go back and pay 380 for the house?
No,
you can't, right? So you marry the house. As soon as you pay for that house, that's the price you pay. You can't go back and change that. Financing the house. Can you go back and change the cost of financing on the house? Yes, you can, right? That's what a refinance does. So you can take a loan out at a rate of X today. Let's just say it's going to be 6.25% today. And let's say next spring, interest rates, we get in a nice run, and interest rates are down at 5.25%. So let's say they go down a full point by next spring. You can go back and you can refinance, and you can trade your 6.25% rate for a 5.25% rate. And you just changed the cost of the financing to get that house. You just lowered your cost there. So, to your point, Mike, there's a number out there. The number is 5.5%. The number of 5.5% is kind of magical out there, because that's what experts are saying, that if rates get to 5.5%, that's going to inject another 9 million buyers into the buyer pool, right? So, and this is across the country, of course, but another 9 million buyers come out of the woodwork and say, okay, now I can afford to buy a house. And now you're competing against with that many more buyers. So when you have that type of competition going on, that type of demand that gets injected into the market, well, what happens to home prices? They go up because of the demand that's out there. So the best 1-2 punch that I think someone can do today is you buy a house at today's prices, because you know what you can pay for a house today. Okay. And then when rates go down in the future, you're going to refinance and grab that lower rate and lower one of your costs to buy that house. If you wait, right, you can start off with the lower rate, but I truly think that you're going to get in a bidding war in most houses in the bread and butter price ranges, and you're probably going to go 10 to 20, maybe 25,000 over asking price or list price in order to get that house. Well, now, did you actually save yourself any money by waiting for interest rates to get to a certain level? No. You didn't.
And you may have missed out on the house that you really wanted to.
Right.
So can people get a hold of you at, Garrett, you want to bring up how to get a hold of Mr. Ouverson here, so that you run through these scenarios with folks and run the data for them. You typically give them the numbers right in front of them. And
Yep. So applywithmike.com is the best way to get a hold of me. I made it super easy so real estate agents like you, Mike, could remember it and get to my website. Just kidding. I only
do business with people named Mike anyways, by the way.
Right. Too many Mikes, right? There's too many. Yeah. So applywithmike.com is the best way to get a hold of me. So I have people go to my website there and then fill out an application for me. I work through the application and I get everything set up. I do a screen share meeting with all my clients. So I do Teams calls where I can share my screen, and we go through this type of information. Here's what you're approved for. Here's where your payment's going to be at different price levels, talk about different loan terms, loan options, things like that. And then people can actually just see the numbers right in front of them. It makes it a lot easier to follow. Awesome.
One of the other programs I'm kind of curious about too is people that are trying to sell their house. They have a contingency on it because they don't have the cash and the finances to buy a second place. What's that program that you got there?
Yep. Yeah. So we have a cash offer program is what I call it. It's called the Luminate Power Buyer, right? Nice. But I like to call it our cash offer program because then it explains exactly what it is. You get the ability to go make a cash offer on the next house you want to buy. So here's how it works. Typically it can be used in many different ways, but it's typically used in your example, Mike, where someone owns a house now, right? And they want to go buy the next house, but their fear is that if I sell my house over here first, that's predictable, right? That's predictable, and that's pretty easy, and that's pretty quick. We know how quickly it's going to sell for. or sell and how much it's going to sell for. What we don't know is on the buy side of things. Are we going to get our first offer accepted? Or is it going to be the offer on the second house that we make an offer on, or the third or the fourth or the fifth, right? That's a little bit more of a guessing game there. So their concern is, if I sell this house now that I own now, am I going to be homeless for a while before I can lock down the next house? So our program gives them the ability to go buy the next house first and have that locked down, and then sell their house after they've moved into the new house. So what we do is we say, okay, we know that you can qualify for the next house. So if you're going to sell a house over here and you have $200,000 worth of equity in that house, so you have a $200,000 down payment to work with, and you want to buy a $500,000 house over here. Okay. So you're going to need a loan of $300,000 on this new house. We get them pre-approved, so we know that they can qualify for a $300,000 loan on that next house. And then what we do is we go buy the next house for them in our name with cash. Okay.
Awesome.
So then we go close on that house, and they're just going to rent that new house back from us until their old house sells. And then once they sell their house, we just sell the new house right back to them for the exact same price that we bought it for.
Makes sense. You might, I mean, if you end up selling and have to rent anyways, you might as well rent your own place that you're trying to buy. And yeah,
right.
Beautiful.
Right.
Can they get a hold of you through applywithmike.com about that, or do they have to call you directly on that?
Yep. So apply. They can call me for sure. All my contact information is on my website. So if you go to applywithmike.com, my phone number will be on there. I have a contact us button, so you can just fill out the little form, contact us. Here's what I'm looking for. Or you can fill out an application there. Any way to get a hold of me basically is right on the website.
Awesome. Another question. I got a buyer here, the mounting man. I'm going to have him get a hold of you this week, and I'll probably send him this video too. He's an entrepreneur. Here's his scenario. He's an entrepreneur. His wife has a career W-2 salary, but they're looking for more than just her salary to finance off of. And his mounting man business has gone explosive in the last 2 years. He started with some basic tools and knowledge of Google Ads, and he's basically I think he's close to $500,000 in sales this year, just mounting televisions and drapes and stuff like that. So he's been getting after it, and it's just been awesome watching him grow. He's great social media presence and such, and he's got a rock star history in himself. So I'm looking forward to having you guys collide of worlds. So he was one of my high school friends back in the day. So yes, what does he need to have? If you're an entrepreneur, what you pay yourself, what kind of paperwork do you need for something like that?
Yeah. So when you are self-employed like that, there's a couple different ways you can file taxes. If he's a sole proprietor, which means he's a sole entity there, he probably just files a Schedule C on a personal tax return. And then, so I just need his personal tax return, and that'll show me everything I need there.
Okay.
If he set himself up as an S Corp, where there's a separate entity there, so the S Corp would have to file a tax return, and then he will W-2 himself a portion of the revenue that comes in from the S Corp. So then he'll have his personal side that'll show some sort of W-2 income, and then he'll have the business side that shows basically the rest of the revenue that stays in the business there.
Awesome. I think he is in more of the S Corp land than sole proprietorship. So I'll have him reach out to you. I'll introduce you guys today in email, and awesomeness. You might need a few more months to just get that 2 year. I mean, he has been pretty explosive with this, so I'm not quite sure how long of a history he has. Is 2 years typically what the banks look at or lenders look at?
Yeah. So if you're self-employed, typically you need a 2 year history of that self-employment before you can use that income to qualify. You can shorten that up to 1 year, but you have to have like a W-2 job history in that same field before you can do 1 year. So for example, there was a financial planner that worked for Ameriprise, W-2'd through Ameriprise for 10 years. He broke off and he started his own financial planning business. I was able to get him a loan after 12 months of being self-employed as a financial planner, because he had the 10-year history of W-2 with Ameriprise. So in that type of situation, it can be shortened up to 1 year. In most other cases, though, if you don't have that long W-2 history previously in the same industry, the 2 year is what you need.
Okay. Good to know. And I've been preaching on this show. It's like, get a hold of your lender sooner rather than later. They'll give you some bearing, tell you what you're in for, or what you need to do. And yeah, typically it seems like too many people, I've seen this happen where they just wait. They're like, oh, I'm not ready to buy yet, and blah, 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 blah. And then all of a sudden they find the house and they're like, oh, I'm ready to buy this week. And then they get in and they have to go talk to the lender and get the pre-approval letter so they can make an offer. Well, things take a little bit longer than they should. And the next thing you know, somebody else bought the house. So, and, you know, at the best scenario, you're probably a week to get everything in order for making an offer if you talk to a lender. Best scenario.
We're quicker than that. So
Okay.
it really depends on your situation. If you are, if you got good credit, if you are a W-2 employee, just like you got a base salary of $100,000 a year, that's quick and easy, right? That's very limited paperwork that we need on our end. Lenders can do what's called a verification of employment on the back end. So we can, once we have a client's information and application filled out, there's an online system that a lot of employers subscribe to that provide these reports to us. And so when I get a borrower in and say, okay, they work for 3M, sweet. I can go to this website, I can plug in the borrower's information, and it'll pull up everything that 3M reports to this third-party company. So it's their job title, it's when they started, it's how they get paid, it's all this information, right? So then I don't need the borrower involved really at all. I can take all that information because they supply me with the job history and the income they've made and all that stuff on that form. Piece of cake for the buyer. Fill out the application. I'll do all this on the back end. Boom, you're pre-approved. We can be done in less than 2 hours. When it comes to self-employment, now there's no like third-party employer to reach out to for that, right? Because you're your own boss. So now I have to get tax returns from you and K-1s and W-2s, and the borrower has to supply all that stuff to me. Now it depends on, do they have that stuff on file at home? Or do they have to reach out to their CPA and have their CPA send it to me? And then is their CPA on vacation, or are they on vacation? You know, so then you have, you can have some more delays when it comes to that thing. So once I have the application and the income docs I need, I mean, it's pretty quick and easy from there. Give me 15 to 20 minutes. I can comb through everything and I could be like, all right, here's what you get approved for. It's really just collecting the docs I need to collect up front. That's the range of time that it can take.
Okay. Awesome. Let's see here. So today marks a change of real estate history in the United States. August 1st, 2024.
Yes, it does.
Thanks to the DOJ and the lawyers going after NAR, the National Association of Realtors. They're trying to decouple the seller concessions without negotiation, I guess. They're I don't know. I read through the whole document, but anyways, it doesn't matter. There's going to be new paperwork, first of all. Is the process going to be any different with the lenders, and how are they looking at all this stuff?
It's, to be honest with you, especially in Minnesota, on the real estate side of things, it's business as usual. On the lender side of things across the country, still business as usual. Other states, so Minnesota has always been like a heavy disclosure state, right? Our state is very big on transparency, on disclosing certain things, right? Money and the way numbers flow in a transaction is one of those things that they've always been. We want everyone to know how the numbers flow, who's paying for what, where your money is going to. So in Minnesota, especially, business as usual, because we've been a heavy disclosure state up front, and that's been clear for the most part. Other states haven't had the type of disclosure regulations that Minnesota has had. It's a bigger change in those other states. But there's, like I said, there's really no changes on there. Everything is pretty much done the same way. It's really more of a disclosure type of change that comes up to say, hey, we're clearly going to make sure everyone knows, hey, here's the list price and here's how much commissions are being paid out by the seller, where are those commissions going, you know, so everyone is on the same page.
Cool. I'm thinking about charging more than the average at 2.7%. That's been the historic average for what a buyer agent gets. I'm thinking 3, especially if rates go down to 5, because it's just going to be this brawl.
Right.
But I guess it does give me as an agent more to negotiate. You know, it gives me a little bit more flexibility to it. To me, anyways, it seems like there's opportunity in all this as an agent. So,
yeah.
So we'll see.
So one thing to know, just kind of everything in real estate is negotiable. to be honest with you. If you want to make an offer in a house, and if they have a cat at that house that you really like, you can actually negotiate and write in your offer that I will buy your house for this price, but the cat has to come with it. Like I said, almost everything is negotiable, right? So you can negotiate stuff like that, right?
Yeah. Sounds like some Hollywood negotiation. It seems like I've heard that before, but yeah, wow.
So, and it's always been like that, and real estate commissions is one of them, right? That's always been a negotiable thing, and it's going to be moving in the future here. And so, what a lot of people are going to think when they read like the stuff online, the Googles and the Yahoos, they go on there and you read these articles, it's going to lead you to believe that, oh, now I can negotiate real estate commissions and I can do this and I can do that. It's actually always been that way. You've always been able to do that. It's not new, to be honest with you. No. Interesting. Well, I'm not going to fret it. We'll just move on to the future. And these are the things of business. So, That's the thing. The mortgage industry went through a change like this back in 2010 when TRID is what it's called. It was actually a much bigger change than what the real estate community is going through now. And so I lived through that. I've been doing loans. I'm in my 21st year now. So I went through all that, and it was kind of a big shakeup, and people are like, oh, what's going to happen? And it's like, oh my God, we got all this new stuff going on. Like, how are loans going to get done in the future? Well, guess what? We kept on doing loans, right? Everyone adapts, you figure it out, and it's business as usual. Yes. So I'm still trying to figure out this hosting bit here. I should have probably introed with, how did you get into home loans and such? What's the background story of Mortgage Mike here? Yeah. So I got my master's in exercise physiology. Okay. Nice. About 3 months before I graduated with my master's, I get a call from this guy named Jason Walgrave. Oh, you know him very well. Yes. Yes. Jason Walgrave calls me up. He's like, hey, you should come. So I was in Brookings, South Dakota. I went to South Dakota State. I played football out there and all that stuff. So I was in Brookings, South Dakota. He's up here in the metro area, Minneapolis metro area. He called me up and said, hey, you should come up here and you do home loans. I'm like, what are you talking about? Like, I'm getting my master's in exercise physiology. That has nothing to do with home financing. And I'm like, and what's spurring this call anyway? He's like, well, there's a loan officer up here that me and my team have been working with, but he called me today and said today's his last day. Ooh. And so now we need a new loan officer for the team. He's like, you'd be a great fit. And I said, well, I got 3 months left before I get my master's. I can't just up and leave now. So I'm going to finish my master's out. And then I'll tell you what, I'll come up there and I'll do loans for a year. And if I like it, I'll stick with it. If not, I got my degree. I'll go find something else. Yeah. And so graduated with my degree from South Dakota State. I moved up here to the Twin Cities, started doing loans, and I never left. Been doing it ever since. Was it the same company back then, or things changed, or different company? It was a different world. So that was June of 2004 when I started. That was before the kind of the market crash, right, of 07, 08, 09, when that craziness happened. Yeah. A lot of regulations came out of that crash. And so that's why TRID back in 2010, like those regulations went into play. There's a lot of shakeup there for about 4 years in our industry of, all right, there's a problem here. We got to fix this. We got to fix that. We got to fix that. And so over those 4 years, all that stuff was done. And it kind of molded the world that we see today with the disclosures and how processes are done and things like that. Awesome. When did you start getting into the radio bits of things? I see you on Ryan O'Neill's the Minnesota real estate team, and how did that start in your broadcasting DJ days? Yep. So April of 2008 was the first show. Me and Jason and a guy named Ryan Yardley did our very first radio show on WCCO up here in the Twin Cities, one of the bigger radio stations up here. And so that's where it started. So we did that every single Saturday. It's called Real Estate Radio Hour. Saturday mornings, 10 o'clock. So that's where it started. And then Jason and I ended up moving over to ESPN radio on an AM station for a few years. That was probably 2010-ish, 2011 is when we moved over there. And then we did that for about 6 to 7 years. And then recently we have then just started the podcast, right? Because now podcasts have become more popular. You get all this stuff. AM radio, we could kind of see AM radio kind of fizzling out a little bit and stuff like that. And so then we took the show, which was called Minnesota Home Talk, and we made it a podcast, which is now known as US Home Talk. And so now we try to kind of go nationwide and bring in people from other markets of the country to talk about it.
Awesome. And that's on noon to 1 Wednesday Central Standard Time. Is that correct? Yes.
That's correct. Yep.
All right. Yeah, check that out. You guys got a good vibe, good team there. You guys throw stuff off each other very well. So it's fun just to watch, even if it's not even about if you're into real estate or not. I don't know. I've always appreciated what you guys have done. Very good stuff. I just want to congratulate you on your excellence. So
yeah, no, I appreciate that. Yeah, we have Marcus from Sioux Falls, South Dakota. So he's a real estate agent out there, been an agent for a long time there in the Sioux Falls market. So he comes on every week with us and talks about that market. And we talk a lot about the Midwest because that's where we all grew up. That's where we all live and work now. But we do have people from Florida, Arizona, California. So we do have some people, that span the country that join us every once in a while too, and just talk about their different markets.
Do you reach out to these realtors around the country, or or they find you, or how can they find you and talk to you about potentially partnering? And
Yep. If they want to find us, US Home Talk. You can go to our website. You can connect with us through US Home Talk. There, our podcasts, our links to our podcasts are there and stuff as well. But we have agents that lived and worked in Minnesota that ended up moving to these markets that we stay in touch with. That's most of them are people that we knew from up here, and their life takes them, down a different path. So a lot of them continue to have their license, their real estate license, and they're just in a different market.
Okay. Very cool. Very cool. So when I move to Costa Rica, I'll stay in touch with you guys. So
yeah, perfect.
Of course, that's a little bit outside the U.S., but maybe it'll be global home talk at that point. So
global. I love it. Heck yeah.
The future.
And then once you can start selling real estate on the moon or Mars, we're gonna have to talk about galactic realtor, something like that. Yeah, I like where you're going with this. So that might be our kids, though. That might be our kids that might have to take that over. I don't know if that's going to happen by the time we retire.
I'm thinking asteroid real estate. I think that's where it's at. Like you can plant a flag on that $1 billion gold piece of rock that's floating through the galaxy. I think that'd be the way to go. So
yeah, you might be onto something there.
Less to deal with. So
we'll have to get ahead of the game on that one.
Looks like we got a picture coming up here. Producer's trying to get my attention. It looks like. Oh, you made you a picture.
Look at that.
We will send that to you. It might be your later years. I mean, it looks like your face fills out a little bit more from, wife's good cooking or something. I got
the grays going on. I could do the grays. The last time I had a suit on, I honestly, I don't even remember the last time I wore a full suit like that. It's been a while.
I feel like that needs to be saved for like weddings and funerals these days. The suit is kind of went its way since the 80s, 90s, and so on. So
yeah.
So I had a t-shirt on the other day on the show. I'm like, oh, I could get down with that fashion. A little bit more comfortable.
Yeah.
Sometimes that gets a little too tight up there and cuts off the blood, but
Right. Yeah. It's like, I mean, when's the last time you wore a suit? Can you remember?
For the pictures for the real estate team. Yeah.
Okay.
Probably, I don't know, 5 months ago, 10 months ago. So,
and then prior to that, years probably, right?
Years. Yes.
Yeah, okay. Yeah.
I bought an Armani suit in Italy in 2009 before I came back to the U.S. and I'd wear it maybe once every couple of years, but yeah, job interviews, that kind of thing. But no, not my style. I feel like I can't think as well for some reason. It's all about the looks at this point. It doesn't even matter what comes out of your head. So I don't know.
Yeah. Yeah, I used to dress up more. I used to try to do the tie, at least like a, button-down shirt, tie and stuff to work. And especially with COVID, I mean, things morph so much with COVID, that happened. It's just like, now it's not, it's just a collared shirt like this with, a pair of, Lululemon pants. I don't even do like true dress pants. I'll do a pair of Lululemons that are, more of a, I don't know. Slack. Did people say slacks anymore? I don't know. It's just not a full-on dress type of pant. You know what I mean?
Right. I feel like if you kind of got to dress how your clients dress. So yeah, if they got a suit on, I'd probably put a suit on. But I feel like the suit is just too intimidating for some folks. Like you're just too formal, or and I don't know. It just people that can't connect with you as well. I don't know.
Yep. Real estate's a contact sport for sure. It's just like, it's you meet a lot of people, and people usually do business with you if they like you and they trust you, and similar interests, similar this, similar that. That a lot of real estate is making the connections, and then the personal piece of it versus just the straight black and white fill out a contract stuff. So
yes,
I think the whole world has kind of just been like, doesn't matter if you got the suit, it doesn't matter if you pull up in a Range Rover, it doesn't matter if this and that, right? It's like I want to do business with like a real human being, a personable, human being that I can connect with.
Oh, for sure, especially in this AI time. Interesting points. So what's coming up in the future here? You got any plans? You got anything you want to tell the audience, or you got
future wise, I think rates are going to continue to drift lower. The election could do weird things, right? Because it's so weird that how like economic reports and stuff like that, a lot of it is based on forecasting the future, what's going to happen in the future. So that's going to dictate what we think is going to happen in the future. That's what dictates what happens with rates today. They do a look at the past, and that past does affect it. But there's a lot of kind of like future predictions that go into our interest rates. So if these people predicting interest rates feel good about the future, right, then our rates can go down and stuff like that. The election is like, okay, once we have we're going to have a new president, right? Because the old president is not running. So we're going to have a new president one way or the other. So that's going to be new. So like when we know when the new president is going to be, how do the markets react and how do they feel about the future with that particular president? It can be good. It could be bad. And literally the day after the election can swing our market, right? So when we look at that when we look at that candlestick chart, we might see something crazy happen after the election. We don't know yet. I think it's going to be good either way, to be honest with you. But I think rates are going to continue to drift lower. And could we see interest rates, at 5.75 going into the spring market? I think that's a reality. And can we see rates at 5.5 or maybe 5.25 by next summer? I think that could be a reality too. And if we get to that point, it's going to be a little crazy, right? It's going to be very competitive on the buy side, and sellers are going to be loving it because it's like, I'm going to have 15 offers to look at here. I can just pick the one I like the best. So to your point that you made earlier, Mike, if you're a buyer out there and if you're looking at buying sometime in the next 12 months, I think the sooner you do it, the better play it's going to be for you.
Yeah. It's a little bit more predictable the next 3 months than the next. Yeah.
Right.
Huh. Yeah, business is a gamble. It's all a gamble. That's why I don't go to the casino. It's like, you got to forecast the future. What kind of skills are these? But all right.
Right. You're gambling almost every day in this business. So am I, right?
Yeah.
It's
being a businessman. That's the deal.
Yep.
At least you
you
got
don't
a
need
chance in this business. A casino ain't going to give you much of one. So
right. Yeah. If you're at the casino long enough, you're going to lose.
yes.
Right.
Yes.
You do this business long enough, I mean,
you're going to win.
You're probably going to win, right? So people who stay in it longer, that it works out the best for them in the end.
Yes, sir.
So.
Yes, sir. Well, sir, I know you're a very busy man today. I probably kept you on here longer than you allotted for.
It's all good. No, it's all good. I do have a charity golf event today. So that's my team. My team is up there at the golf course setting up now. We sponsored a couple holes there. So I'm going to be buzzing up there after the show here. And we're going to be trying to raise some money for the O'Neill Foundation of Hope.
Yes.
Very great organization here in the Twin Cities. They help one family or one individual every single week throughout the year. For example, one guy has ALS, so he needs a special wheelchair and a special van to be able to access transportation and stuff like that. Okay. And so one of the people they helped out with the money that we raised last year at this event, they bought him a new wheelchair and they bought him a new handicap accessible van.
Awesome.
So it's a great organization, and they literally help out a family or an individual every single week of the year. That was just one example from last year. And so, it's a great event to go to, and we're excited. And it's literally the one time of the year that I get to play golf. is today.
So you're going to kill it today then. Here it is.
Yep, there it is. So yeah, so that's today. I play golf once a year. I like playing golf. I wish I could play more with kids and work and the kids and all their other stuff. It just doesn't happen. So I kind of look forward to this day because it's my one chance to actually swing a club.
So the other three guys are ringers in professional golfers. It's a best ball tournament, right? So all you got to do is basically drive the cart and, maybe drain a putter here or two. So.
Yep. I would say if I'm going to contribute, I'm going to catch something off the driver. I'm 6'4", 220. I can get the ball out there if I can hit it clean. So my contribution will be 1 out of every 4 holes. Maybe I'll hit a drive that we'll use. And then outside of that, it's all on you guys.
Moral support. Yep. Hyping the team. Yep.
Exactly.
Cool. Try to get some video of what's going on out there. I might be out there myself getting some video and just checking out the whole deal. And they got like a silent auction tonight at 4:30 and a dinner, it looks like, at the Oak Marsh Golf Course.
Yep.
Is that open to everyone or is it just the general public?
Yep. Anyone can go up there and go do it and get involved. If you're not golfing, that's completely fine. You can go up there and you can do all the other stuff. There's a silent auction, there's a dinner, there's a bunch of stuff going on up there. So you can come on down, stop on down. If you're listening to this, you got nothing to do today. Stop on down and check it out. It's a fun event. Awesome.
And Ryan O'Neill, he's borderline saintish. If you ever meet him, he just has a nice glow. He's super kind to everybody. Says great things about everybody. And you can catch him and Mr. Mortgage Mike here on Saturdays on the Minnesota Real Estate Show from 10 to 11. You guys are still on WCCO, it looks like.
Yep.
YouTube, Facebook, Audacity. Is that also part of the
Odyssey, I think is
Odyssey.
What isn't that the kind of like the live stream side of WCCO, if I remember correctly? So
I think so. So multiple ways. Just Google the Minnesota Real Estate Team show, and that should pop you where you need to be. Awesome. All right, Mr. Ouverson, big props to you. I appreciate your spirit. I appreciate your things you've done in life. And again, I hope you don't mind me calling you a rock star because I really, truly feel you are a rock star on the right sorts of ways. Father gets it done at Luminate Home Loans. And you just seem to enjoy life better than most folks. So
you can call me rockstar all day long. I mean, if I wasn't doing mortgages, I'd even
Dusty Rubbers would be out in Europe right now. So
I'd give her a shot,
Rock and roll.
Yeah.
Rock and roll. All right, sir. We will catch you on the flip side. I appreciate you coming on here for everything. And we will send you that picture as a token of appreciation, and we'll get the word out when you guys are on this doing your real estate show. We've been joking on this show that we're the number 3 podcast live stream in Minnesota. So behind the other 2. So we might be 3 out of 3, but whatever. So
I love it. Yeah, this is good. Thanks for having me on. Definitely appreciate it.
Yes, sir. We'll catch you on the flip and maybe see you at the golf course today.
All right. Sounds good. We'll see you out there.
Peace.
Yeah. Bye.
Mr. Mike Ouverson. You can contact him at Mike Ouverson, applywithmike.com. He will answer all your questions. As you can tell, he's a good personality, good dude. So there you go. What more can you need when trying to do business? Contact him at his number, even at 612-202-8321. He's got a nice office crew, including Mark Frederick. You might chat with him. He's a good dude too. And that's what we got today. It looks like. My name is Mike Walgrave. I'm Twin Cities Remax Realtor. You can contact me if you're looking to buy, sell a home, or invest, or find a builder even. Michael@walgrave.com, or you can call me at 612-930-2929. Appreciate you, Mr. Beans in the background, Garrett Beaner, aka Beans, producing the show. And if you're in the neighborhood of the Oakdale, Minnesota, they have the Oak Marsh Golf Course. They're having the O'Neill Foundation of Hope going on today. So we appreciate you all tuning in. Thanks, Kay, for tuning in. Everybody else on the message board, like, subscribe, share, hit that notification bell. And we'll catch you tomorrow on Friday for show 15. We're on at 9:30 Central Standard Time, Monday through Friday currently. And I just wish you all to enjoy the day and be kind to people out there and keep her moving.